It's 1:30 p.m. in Lagos, same time, 12:30 in London and in Accra, Ghana. We're bringing you market analysis and insights on Business Incorporated, live from Channels Television. Here's what's coming up on the program. Egypt to battle for Kenya tea supplies amid US dollar shortage. The South African Broadcasting Corporation records 464 million rand losses in 6 months. And the Renewable Energy Association of Nigeria urges effective implementation of Electricity Act to expand the country's renewable energy sector. Hello and welcome to the program. I'm Will Ibanga. As always, let's kick off with the markets, starting with major equities there, where Nigeria, it was raining green at the NGX, and also in South Africa. Looking at the board there, we see 0.15%. The NGX is climbing real high, crossing high levels there and breaking barriers. That's a great one for the NGX. South Africa, 0.11% up today. Now look at Egypt, how the EGX performed at intraday. It was up more than 0.5%, 23,000 levels now. Egypt is really urging on its index there. A lot of investors keen into that sector. Now, Kenya, however, closed yesterday's session in the red, back to the red zone from the green after one day of positive trading in the green. Now bringing in James Ola Adisa, we're looking at what's happening at the NGX currently, and he's a financial analyst, Chapel Hill Denham, to give us insights as to what's driving the markets and what we should be looking out for the close at the close of the bell. Good afternoon. It's good to have you on the show.
Good afternoon. Thank you for having me.
We're seeing the markets in the green. We're crossing levels here now, going higher. Are we reaching for the 80,000 level here?
Sorry, I didn't get what you said. Could you take that again?
I said we're crossing the 70,000 now, going higher. Are we targeting 80,000 level at this moment, anytime soon?
Okay. I mean, the markets, the positive sentiment in the equities market is definitely admirable. 80,000 is something that we would like to see, but for now, our expectations are a bit, cautious. We like that it has passed the 70,000 mark already. We see investor sentiment remaining strong. Buying interest in the equities market is still going on. But, we would need a catalyst to be able to get to new levels. And, one of such catalysts would possibly be, policy direction around FX, which would, see foreign investors come back into the market. If we're able to get such catalysts into, as soon as possible, we would probably see the market, rally significantly.
Oh, fantastic. Speaking of catalysts, we're seeing all the companies joining the NGX today. Mikio is listing 4 billion ordinary shares by introduction on the NGX at 2.96 kobo per share. What are your sentiments regarding that? What do you see for Mikio coming at that price? And how do you see investors buying into it?
I mean, the first day of trading, it has been really good. As you said, Mikio got listed by introduction at 2.96. We saw full bid at the max price of 3.25. Right, and if first impressions last long, then we would expect to see positive sentiment continue in the name. On my views, I think the name is definitely good. It offers diversification in the pharmaceutical and healthcare sector of the NGX, right? And given that we're seeing a name like GSK Living, this is the right time to see Mikio coming into the market, and it's a known brand and it could potentially deliver value to investors.
So we'll look out for the close and see investors carry over that positive sentiments to tomorrow and probably till the next week. Good news and good for Mikio. But we just go over to the other side where Japan Gold is also trying to raise more capital and 20 billion naira in additional capital there to expand in mines and other areas. What do you think? Why do you think Japan Gold needs this money now? And do you see investors? Investors are actually definitely buying Japan Gold, but do you see it being a sustainable venture?
Yeah, I mean, the name has fared well this year, and raising 20 billion to acquire a 50% stake in H&H Mines or the 100% stake in Covenant Gems and Gold Minerals, as well as a gold refinery, something that is definitely positive. We've seen that, this administration is pro minerals, right? They intend to do a lot more in leveraging the natural minerals that Nigeria is blessed with. And Japan Gold seems to be trying to, put itself in a position where they can, benefit from this, and also serve to, kind of help the administration reach their goals. So I think it's timely in terms of, the plans for the administration. I think, that the name is definitely going to enjoy some positive sentiments from investors, right? And, we will watch to see how this goes with time.
So what's Japan Gold currently trading at the moment? Do you have any idea of what's their percentage growth, their gain in percentage terms at the moment?
Yeah, it's about 9.87% today. That's how much they've traded today, given that the news was released.
Fantastic. So do you see profit taking in the coming days, or do you see investors still, going at it like honey?
We'll possibly see some profit taking, maybe. But I think what's more important is the long-term view. Is this acquisition going to make the company a fundamentally sound name? Is it going to help the company deliver value, to equity shareholders? I think, raising this capital will definitely do that. So from a long-term view, I think investors will definitely benefit.
Thank you so much, James Oladisa, financial analyst, Chapel Hill Denham, for sharing those insights on Business Incorporated.
Thank you very much for having me.
Now let's go over to the Middle East, where the bear has a firm grip on the markets at intraday. We see Abu Dhabi down 0.06%, Dubai also in the red, 0.61%. Elsewhere, Saudi Arabia also trading down at intraday, 0.41%. Qatar also down 0.81%. Now to the EU, where Germany, like many European countries, has welcomed millions of refugees over the past years, with numbers rising ever since Russia's war in Ukraine began. Now the country is trying to enact a new immigration policy. Lars Alter with Deutsche Welle joins me from Berlin. Lars, what is the government planning?
Yeah, thanks for having me, Will. Now, it seems the government has realized that the way it's been handling immigration so far is not working. Too many people coming in, not enough infrastructure, and high costs. Berlin is now trying to make sure they're having a more sustainable policy in place, and they're trying to achieve this by, on the one hand, deporting those more quickly who don't have any legitimate reason to come and don't have a reasonable chance of being granted asylum or refugee status. As for others, the government wants to speed up the immigration process and get them into a legal status more quickly so they can be integrated into society, but also the labor market. They want to make it easier for qualified applicants to get into the country and get work permits. They want to establish a point system where immigrants can advance by showing language as well as professional skills, business experience, and they get extra points, for example, for IT expertise. So that concept, Berlin hopes, could attract many who see their future in Germany and can also contribute to the country and its economy.
Yeah, this fantastic plan. I hear all this, but will this help German businesses?
Ideally, yes. However, there is one big hurdle, and Economic Minister Robert Habeck just touched on that in a speech yesterday. He is afraid that as the mood has changed in Germany and many in the country are feeling overwhelmed by the arrival of ever more immigrants, that those working in immigration services could be tending to not serve new arrivals well and instead slow down the immigration process or even reject them outright for whatever reasons might be applicable by, let's say, not granting the necessary visa for people. He fears that some of these people might not know how much immigrants are actually needed by German companies. Mr. Habeck says that some people seem to not understand the problem we are currently facing in Germany. Many in the country might be uncomfortable with high levels of immigration, but it is actually an important factor in solving one of the most dramatic problems here, a shortage of skilled workers, which has already led to long waiting periods for any kind of, let's say, construction work or installation or many other jobs. It factors into the recently weak economic performance in Germany, and it has even put some companies out of business.
Of course, definitely. But what are investors looking at in today's markets?
Well, as so often, investors are looking at what happens in Washington today. A major speech by Fed Chairman Jerome Powell. And why is it important? Because recent data pointing to a cooling U.S. labor market had many believe that the Fed would be done hiking up interest rates for now. However, just yesterday, a number of Fed policymakers were quoted as to having a surprisingly balanced tone regarding their ideas of future Fed policy, some sounding like there could indeed be more rate hikes in the cards. Now, investors are hoping to get a clearer picture today when the Fed chief speaks. That'll be late in the day, however, and will mostly be reflected in tomorrow's trading.
Thanks, Lars. Lars Alter there from Deutsche Welle for that insight. Now we move over to the U.S., where stock futures inched lower early on Wednesday after the S&P 500 and Nasdaq Composite notched their longest winning streaks in about 2 years. Futures tied to the S&P 500 slipped 0.03%. We see the Nasdaq, one of the futures, also dropping 0.08%. However, the Dow Jones Industrial Average futures rose marginally by 0.02% in after-hours action. Now, shares of Array Technologies tumbled about 13% as the solar tracker company offered weak full-year guidance for earnings and revenue. Spirit Aerosystems, a Boeing supplier, lost 14% after announcing a plan to raise capital through stock and note offerings. Now in Asia, most Asia-Pacific markets fell in choppy trading on Wednesday, with South Korea's benchmark index wiping out more than half the gains made earlier this week, while investors digested a positive business sentiment survey from Japan. In South Korea, the Kospi closed down 0.9% to end at 2,421 points after dropping 3.24% in the 2 sessions since Monday. Japan's Nikkei 225 ended 0.33% lower at 32,166 points, and Australia's S&P 200 closed 0.26% higher. Hong Kong's Hang Seng Index dropped 0.46%, while China's Shanghai Index slipped 0.16%. Now move on to the oil space now, where prices fell on Wednesday to their lowest in over 3 months after industry data showed a steep build in U.S. crude supplies, while mixed Chinese economic data raised worries about global demand for crude. Brent crude futures dropped 25 cents to $81.36 a barrel, while U.S. crude futures fell 35 cents to $77.02 a barrel. Both declined to their lowest since July the 24th in early Asia trade. U.S. crude oil stocks rose by almost 12 million barrels last week, according to market sources. Now, data in China, the world's biggest consumer of oil, also raised doubts about the demand outlook. Now we look at the metal space now, where gold fell for a third straight session on Wednesday, weighed down by a stronger dollar, while investors looked for more clarity on interest rates from the Federal Reserve chief after mixed messages from a host of U.S. central bank policy makers. Spot gold was down 0.2%. After hitting its lowest since October the 24th on Tuesday. U.S. gold futures, however, were flat at $1,974.70. Elsewhere, we're looking at spot silver, which fell 0.6% to $22.48 per ounce, while platinum eased 0.3%. Palladium dropped 2.5% after hitting its lowest since October 2018 at $1,016.06 a barrel earlier in the session. Thanks for staying with us. Nearly 6 million Africans live without electricity access. And while Africa may have the most potential to generate solar power, according to International Energy Agency, the continent lags behind installed capacity. Hawks Power secures over $100 million in equity and debt to boost growth of community solar mini-grids in rural sub-Saharan Africa and South Asia. William Brandt, Chief Marketing Officer for Hawks Power Systems, joins us. Good afternoon, William. This funding is quite huge. Can you explain how you plan to use it?
It's great to join you, Will. Thanks for having me. So it's a big deal for us as a company. It's also a big deal for the industry that we represent, the mini-grid industry. It's a clear signal to governments, to investors, that we are a bankable, ready for infrastructure level investment industry now today. And it's going to be exciting to see where we go from here. For Husk in particular, we're going to use over 2/3 of our equity to invest in expanding in sub-Saharan Africa. And that's going to be largely focused on Nigeria. You mentioned that there are 600 million people in sub-Saharan Africa without access to electricity. 90 million of them are in Nigeria. We're going to take a lot of that equity and some of the debt and put it to work in Nigeria. The goal is to add 1,400 new mini grids to our fleet. We currently have 200, so an 8x growth from where we are today. And a lot of that growth is going to happen in Nigeria. We're also committed to entering additional markets in sub-Saharan Africa with the Democratic Republic of Congo, top of our list, but also 3-4 other countries as well to follow. So it's going to be a really exciting growth phase for the industry coming up. But I should also say that, you know, the industry has yet to achieve its full potential. The World Bank says that mini grids like the ones that we make and operate are, you know, the most cost-effective, fastest way to electrify 380 million people in sub-Saharan Africa. Yet we're only, you know, scratching the surface of what we need to do. 160,000 mini grids need to be built with billions of dollars of financing. So this is a step in the right direction, but we still have a lot more work to do.
Definitely a lot more work to do, saying that Africans, especially the rural population, are quite difficult to adapt to new things, especially when they're not very familiar with it. But I would just want to know how you intend to get that population to adopt this new energy source. Do you have any strategy?
Well, we already have 15 mini grids in Nigeria, and we plan to add another 60 next year with the goal eventually of getting to 1,000. That's our goal for Nigeria. Overall, for sub-Saharan Africa, it's 2,500 mini grids. And, you know, the customers are adapting to and adopting our mini grids very well. You know, for a small and medium-sized enterprise in the communities that we serve, which are mostly rural, you know, they see a 30 to 50% cost savings overnight by switching from diesel generation to solar electricity. So there's a immediate value inherent in what we do. And it's interesting. I mean, we're actually providing more reliable electricity to rural Nigeria than most urban Nigerians are getting from the discos in the cities. And even though, you know, maybe our customers don't know that, they immediately expect that level of service. And we're delivering that level of service, both to small enterprises and to households. So we're already seeing exceptional uptake with the majority of households in the communities that we serve are taking up the electricity that we're providing.
Oh, you mentioned that you serve in more rural communities than the urban communities, especially in Nigeria. But rural dwellers, especially in sub-Saharan Africa, are very low-income earners in terms of their earning power. But what steps have you taken to ensure that the project is commercially viable for us and for investors alike with respect to the tariffs and the minimum vending structure?
Right. So, Husk started 15 years ago, and we were the category creator, essentially, starting in India. We've learned a lot of hard lessons over the years to get where we are today. In terms of affordability, our customers see value in what they're getting. It's not just about the cost, but also the value that they're getting, as I mentioned earlier, in terms of cost savings and ability to invest in new businesses and grow their existing businesses. We are governed just like any other distribution company in Nigeria by the Regulatory Commission, and they vet all of our tariffs that we charge, which are cost reflective, just like the discos. We have a clear line of sight in what we are allowed to do based on the regulatory framework in Nigeria for mini grids, which is exceptionally mature and quite robust. So, we're well covered there. As I said, we see a level of uptake that's already indicating that we'll be able to get to, significant numbers of connections. We estimate that this new funding will get us to 300,000 new connections. A lot of those will be small businesses in sub-Saharan Africa. But I should also say that, one of the other aspects that we provide electricity, but it's more than that. We're also coming into the communities and providing financing and sales of both households and commercial appliances so that consumers can actually use the electricity for more productive uses, grow the economy, improve their livelihoods. And we're also introducing energy services into the communities that we're serving. For example, we're piloting in Nigeria right now e-motorcycles with leasing and battery swapping, and also agro-processing hubs. So we have an integrated approach to really try and drive rural industrialization and bring our communities along with us. This is a long-term relationship. Providing electricity is the first step, but we have to go further and grow with them into economic well-being.
Okay, definitely. We know that scaling up solar in Africa has its challenges that one has to face as a company, and I believe Husk is doing all that it can. Thank you so much, and all the best.
Thank you so much.
Now, more commendations still on electrification in Africa are pouring in for President Bola Tinubu over the signing of the new Electricity Act into law. The latest is coming from the president of the Renewable Energy Association of Nigeria, REN, Ayo Ademulua, who believes that the effective implementation of this act will unlock opportunities to expand Nigeria's renewable energy sector. Let's take a look at it.
Yeah, I think it's an exciting opportunity, not only to our organization, but to Nigeria and developers across sub-Saharan and African and all over the world who can tap into it. I mean, it's basically trying to say that we can fast track energy access to different parts of the country, both on-grid and off-grid. You can imagine, I don't know the state you come from, but you can imagine your state can partner with developers and set up power generation plants to provide the electricity for that state. We've been played over time with some of the issues we have with the transmission grid because of, issues along the line. But now if you have decentralized generation, you are not traveling, thousands of miles to the place where you are. You can just set up the power plants in your state and run distribution within your state, and it helps a lot. So you can imagine if all the states of the country goes into that, before you know it, we're going to have power. And I think the Electricity Act is also a speed in the wheel of the Nigerian Energy Transition Plan, which tries to be net zero by 2060. So I believe that all these policies and frameworks and, the Act is working together towards a better Nigeria to light up the space.
Now we go over to Egypt now, where the country is considering buying tea from Kenya through barter trade instead of tapping into its dwindling reserve of US dollars. And that's according to the Kenyan Treasury Secretary. The motivation behind this move stems from the severe shortage of US dollars in both countries, which has exacerbated inflationary pressures and placed a heavy burden on their economies. Under this arrangement, Egypt's government will procure Kenyan tea, while Kenya will have the freedom to choose what it wants to import from Egypt. Now to South Africa now, where the South Africa Broadcasting Corporation has recorded nearly 500 million rand in net losses in 6 months into the 2023-2024 financial year, mainly due to declining audience ratings. The Deputy Minister of Communications and Digital Technologies, Philly Mapulane, made this known during a briefing by the board and management to the Communications and Digital Technologies Portfolio Committee on the Public Broadcaster's Corporate Plan. He adds that in terms of its corporate plan, the SABC hopes to secure a profit of 56.6 million rand and targets 6.5 billion rand in revenue expenditure with 38% growth. And that's how we wrap up this edition of Business Incorporated today. I'm Will Ebong. Thanks for watching, and I'll see you tomorrow.